What I like about earnings season is that sometimes you get great companies that report very good earnings, and yet the stock market does not reward that company right away. And so you basically get more information for, let's say, cheap or free, because you don't have to pay a premium. Sometimes great earnings report, you get more information, but then the stock goes up by 10, 15% or so. And then afterwards, if you want to buy the stock, well, you'll have to pay that extra premium. Or on the flip side, sometimes the stock goes down 10, 15% because, well, the information that you got is not great. Now, this video, I want to touch on a company that we recently covered on the channel a couple of days ago, which was Lam Research. It reported earnings, great report from the company. And I also want to touch on another company in the same industry, in the same segment, actually, and that's called Applied Materials. So let's go over both of those companies, one with the current earnings report and the other with just a major overview of what has happened in the last 3 months. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So Lam Research was up just 5% after reporting what I thought was a pretty good report, despite what we've heard from ASML. ASML reported okay earnings, but then guidance was not great at all. Fears of China, the restrictions, etc., to hit the company have, well, basically pulled the stock down. Stocks like Lam and Applied Materials have also come down, but overall, I thought this was a pretty good report. Now, year to date, the stock is now still down 1.55%, has a market cap of just under $100 billion and a forward P of 21.4 times. Now, if we look at what the analysts are expecting right now, some updated numbers here for fiscal 25, 26, 27, we see that 25, 26 sales growth around 16% year over year, EPS 18.5% in fiscal 2025, 23% in fiscal year 2026, and then fiscal 2027, currently analysts are expecting sales growth of 9.6% year over year and EPS growth of 12.77% year over year. If we currently look at the average analyst price target, it still sits 22% higher than the price we're at today, but it has come down a little bit in the last couple of days despite the good report and commentary. If we then look at some pricing metrics, compare it to its 5-year mean, we can see that, well, from a forward PE, EV to EBITDA price to sales standpoint, it is a little bit more expensive than the 5-year mean. If we look at price earnings to grow, that still sits at 1.7. We're going to compare Lam to Applied Materials later down the line. And so for the quarter, if you look at some GAAP metrics, the revenue increased 8% quarter over quarter to $4.16 billion with gross margin of 48%. That's up 50 basis points quarter over quarter. Operating income, 30.3% of total revenue. That's up 120 basis points quarter over quarter, with diluted EPS post-split of 86 cents. That's up 10% quarter over quarter. If we then look at what has happened with the company overall, right, in the last couple of years here, total revenue is up 76.5% since Q2 of 2019. Free cash flow has increased by 78.9%, gross profit by 85%, net income by 106%, operating margin is up 16%, and gross profit margin is up close to 5%. As you can see, more recently, if we look at operating margin, that has gone up over the last couple of quarters, so as revenue, basically so as every other metric here. Looking at what's expected, of course, we have seen the revenue expectations. We can also now see the free cash flow expectations for the coming fiscal years. And in the last 12 months, that's going to be crucial when we do the reverse DCF at the end of the video. So right now, last 12 months, free cash flow sits at $4.839 billion. Now, if you missed the earnings call, these were basically the comments that were made. So Lam expect wafer fabrication equipment growth in 2025, driven by investments in leading-edge logic nodes and advanced packaging. Lam is well positioned to outperform overall wafer fabrication equipment growth in 2025 due to its industry-leading position in critical NAND processes and exposure to technology inflections like gate-all-around, backside power distribution, and advanced packaging. Lam's customer support business group saw strong demand for productivity enhancements and installed base reuse. Lam expects China to represent a lower percentage of its total revenue in 2025 compared to 2024. So of course, when you hear that, and well, when you know that China made up 37% of total revenue, then yeah, you might start to be a little bit less bullish because, well, if China is going to represent a lower percent in 2025 compared to 2024, what does that mean? Does that mean that there's going to be less demand, or does that mean that other regions are going to increase more to offset that loss? More on that in a second. Last in here, Lam is confident in its ability to continue delivering operating margin leverage in 2025, driven by operational efficiency initiatives and growth in high margin segments like advanced packaging. So, going back to, well, the regions and the percent of revenue, so we see here that China is 37% of revenue, Korea 18%, Taiwan 15%, United States 12%, Japan 7%, Southeast Asia 6%, and Europe just 5%. Now, of course, if they expect China to be lower as a percentage of overall revenue in 2025, we should then hope that the other regions increase when China comes down. Now, I've recently heard the CEO of ASML talk about the fact that, yeah, during 2020, 2021, 2022, the pandemic period where the backlog was extremely big, China back then was a smaller percent of revenue. More recently, China became around 50% of the revenue, but he said that's because, well, previously they could not deliver to China because of that backlog, because of supply chain issues, etc., etc. And so it artificially, it made China look much, much bigger of a business for them than it actually is. He expects China's total revenue, well, percent of revenue for ASML to come down because, well, it goes back to the natural situation, the natural mix. Maybe we're going to see the same here with Lam Research. We also had a couple of comments from some analysts here. So analyst number 1 here from Susquehanna, which has a neutral rating on Lam, said the strong quarterly results and guidance were expected, citing leading edge logic and investment in high bandwidth memory from Micron and SK Hynix. However, concerns about Samsung's delayed investment in memory and trailing edge logic inside and outside of China could be an issue for some time. Jefferies analysts echoed those sentiments as the numbers were seen as solid despite the weak China outlook, challenges tied to Samsung and Intel, and concerns about a recovery in NAND. Lam acknowledged the China headwinds but offered a much more positive outlook for NAND on the back of technology transitions. Better results and guides were better than sentiment that dropped significantly after ASML's order miss. We believe some of the delta is related to the difference in lead times, but clearly China is softer and that will continue to weigh on sentiment. The analyst here has a buy rating on Lam but lowered his price target to $95 from $110, but of course we know 95 compared to the price we're at today is higher. I'll continue here with Morgan Stanley analyst noted that the China declines have been offset by strength elsewhere, but at this point it's hard to escape questions on China given the continued export restrictions and the pending annual revision to US Commerce Department export controls. It is our understanding that some of the broad brush strokes of the rules have been conveyed to companies, and in that context, Lam's description of modest declines next year is encouraging, particularly relative to ASML, talking about China declining 20% of revenue from 47% in the September quarter. The analyst here has an equal rate rating and a $76 price target on Lam. The CEO of the company said, with continued strong execution, Lam delivered financial performance ahead of expectations. Looking forward, etch and deposition are fundamental to enabling the next generation of semiconductors. Our investments in key technology inflection position us well to outperform WFE growth in 2025 and beyond. If you look at the guidance that they provided, they expect revenue to be around $4.3 billion, gross margin at 46.9%, operating income 29.9%, and net income per diluted share around 87 cents. And so right now, if we plug in the numbers that we've seen, so free cash flow trailing 12 months, $4.839 billion, terminal growth rate 4.08%, a discount rate of 8.04%, we can see that the implied growth rate to justify today's price sits at 1% growth for the next 10 years. Now, we've seen that it's expected to grow faster than that, well, at least in the next couple of fiscal years, right? Maybe not in the next 10 years, but at least in the next couple of fiscal years, more than 16%. So seeing that right now we're sitting at 1% despite the China concerns, etc., etc., I still believe that we are, in my opinion, in an undervalued territory. I mean, even if we put it at 5%, let's say. If we put it at 5%, the intrinsic value here is around 38%. Well, 38% upside than the price we're at today. So yeah, that's quite a lot. Even if you want to be extremely conservative, only 3%, still 17.3% upside. So yeah, I still believe, even after this earnings report, I still believe this is a big opportunity, especially for those that are interested in that sector. Moving on to company number 2, that's Applied Materials, ticker symbol AMMT. Year to date, the stock is up 14%, has a market cap of $151.4 billion and a forward PE of 19.8 times. Here, if you look at what the analysts are expecting growth-wise, much less than Lam Research, especially in fiscal 2024, sales growth of just 2.2% year over year and EPS growth closer to 6%. Then analysts are expecting a reacceleration in fiscal 2025, sales growth of around 11% year over year and EPS growth of around 13.7%. In fiscal 2026, analysts are expecting sales growth to increase 8.13% and EPS by 11.6%. If we look at the current average analyst price target, that sits at 25.4%. By the way, they will report their quarterly figures November 14th. And here as well, when comparing the pricing metrics for PE, EV to EBITDA, price to sales, price to free cash flow compared to the 5-year mean, it is a little bit higher. Price earnings to growth sits around the same as Lam Research, around 1.7. So of course, when we compare both of those companies, you can see it's extremely close. And so if we look at what Applied Materials reported 3 months ago, these were the numbers. So we've got revenue that's up 5% year over year to $6.78 billion. Semiconductor systems are up 5% year over year. Applied Global Services up 8%. And display and adjacent markets up 7%. The CEO said here Applied Materials is delivering strong results in 2024 with record revenues in our fiscal third quarter and earnings towards the high end of our guided range. The race for AI leadership is fueling demand for our unique and connected portfolio of products and services, positioning Applied to outperform our markets over the longer term. Non-GAAP gross margin increased 100 basis points year over year. Non-GAAP EPS increased 12% year over year. Free cash flow was $2.1 billion, and they paid a dividend and bought back shares. Looking at free cash flow for the last 12 months, that sits at $6.565 billion, expected to be growing a little bit in the next fiscal years. If we look at the overall performance of the company in the last 4 years, total revenue is up 44.5%, free cash flow is up 81%, gross profit up 50%, same from net income, operating margin is up 2.61%, and gross profit margin is up 4% and has been flat-ish right now for quite a while. Looking at the different segments, as we've seen before, so we've got semiconductor system revenues that has increased 113.9% since Q3 2019, and that's the biggest part of the business, which is the blue one right here. Then you've got the orange one, which is Applied Global Services, that's increased 61.7%, and display and adjacent markets revenue that actually declined 45% since Q3 2019. Now, as for what's expected in the coming quarters, we can see that EPS normalized estimate $2.19, on a GAAP basis $2.15. Revenue should come close to $6.96 billion. With regards to EPS revisions, we've seen 21 revisions on the upside and only 4 on the downside in the last 90 days. Looking at what a lot of analysts are expecting in the coming years, and then only a few in 27-28, we can see that, well, growth is expected to accelerate, that is EPS growth. With regards to revenue growth after the slow 2024, it should be closer to 9% or so, 8-9% on average. And so here, if we do the same, we plug in the free cash flow numbers, so $6.565 billion, terminal growth rate, discount rate, same as before. We can see that the implied growth rate to justify today's price is 2.5%. Now, we know that in fiscal 2024, they're not going to grow much, right, revenue-wise, but then it's expected to grow a little bit faster in the coming fiscal years. So here again, we have a good company, stable company, buying back shares, paying a little dividend, free cash flow wise, no problem. I mean, 2.5%, again, same story with Lam Research. Yes, maybe short term, there might be some uncertainties, right? Always China, China, China. But over the long run and after the uncertainties are over, do you think that the stock will not move? I think the stock will move, and quite quickly, because you're getting here a quality company in a growing industry that is expected to grow quite a lot in the coming years. I don't think we're nowhere near the end of the AI wave. So here again, 2.5%, you can play around with that. You can maybe put here 5%, that then represents, well, 22% upside from the price we're at today. So that's already not bad, right? So yeah, those are the two companies I wanted to cover right now. This is Lam Research, the situation right now with the stock. It does seem like we did rebound above that $71, $72 or so. That was a support already a couple of times on the weekly and was a previous resistance here in July 2023. If we look at Applied Materials, it's a bit trickier here. We can maybe expect it to rebound if it drops a little bit lower to around $174, $175. That was a rebound zone here already twice, one in August and one at the beginning of September. Here, of course, as well, that big red candle is because of ASML, which has brought the stock under the 200-day moving average, and in this case also the 20 and the 50-day one. RSI is here pretty neutral, so I would guess that the market is still waiting for the next earnings report, which will happen November 14th. So overall, that's about it for me in this video. Do let me know what you think about those two companies down in the comment section below. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.